Ladi Bello is a fixed income dealer at Access Bank. He joins me for a focus on the market activities so far this week. Ladi, welcome to Powerland West Africa. So previous session, we actually saw mixed trading as investors went ahead to book profits in the bond space while they continued to pursue tenors in the T-bills space. What are your expectations for today?
Hi, good afternoon. Thank you for having me. Within the bond space, we've seen a little bit of bearish sentiment closing the month. That's the month of July, as well as into the month of August. We've seen some counterparties taking some profits as well as close their books on a relatively profitable note. So going into the day, we've seen a little bit of retracement on these yields. So the longer tenured instruments have come down an average of 20 to 30 basis points. As from then on, I would expect to see the yields continue to decline gradually as the system liquidity improves. Next week, we have about 46 billion in coupon payments coming in. And the week after that, we expect trickles of OMO maturities as well as fact payments coming into the system. So by and large, we expect to see a downward trajectory in yields in the coming days. Within the Treasury bill space, we've continued to see minimal activity, a bit of resistance around the 4% handle that we've seen over the last couple of trading sessions. Going into today, we've seen mixed sentiments. We've seen some demand across the May and June, 2021 OMO bills. And we've seen the persistent trend of demand on the NTB maturities across the curve simply because of the amount of supply within this space.
So your pessimistic view on the trajectory yield obviously is no exciting news for investors. So what do you suggest, or what are you telling your investors? Where are they putting their money now?
Well, as we all know, there's no news in saying the fact that there are limited investment outlets available within the fixed income space in Nigeria. So you have the NTB space where you're currently getting the lowest yields, and when compared to the OMO maturities, which local corporates and retail investors cannot participate in. So counterparties are stuck within a few limited investment options. They have the promissory notes that are not largely available. The NTB maturities that are traded within banks, so those are relatively easier to purchase, as well as the bonds, but those provide relatively longer durations in which some of the counterparties in the market hold positions for that long. So by and large, you still see activities skewed towards the short-tenured OMO maturities, as well as the short-tenured bonds that are available in the market. But the outlook is still fairly positive. A long way to go in terms of its borrowing, but it's kept its pace of what it's offering within the last couple of bond auctions. The amount of supply within the market is limited within the OMO auctions that haven't been that frequent. They've been few and far between. And in terms of the supply of bonds, they're just simply not there in terms of the amount of cash market that can fill that order. So what we're going to continue to see is the demand outweighing supply in the market, thereby forcing yields down in the short to near term.
So talking about liquidity in the markets, Ladi, we saw a retail SMIS auction debit yesterday at the previous session, and we also did see CRR. How did this impact liquidity in the market?
Okay, so from last month's close, we saw OBB and overnight rates hover around the 2 to 3% mark. We've had improved liquidity when compared to of the year. But having said that, as you said, there was a retail SMIS and the CRR debit on Tuesday, which is yesterday, which took liquidity on a downward trend. So now it's around just under the 300 billion mark. We're coming from about 700 billion opening the week. So we've seen OBB and overnight rates. So we should now be around the 14 to 15% mark on those respectively.
So we've seen 3 days of trading so far into the week now, mixed market reactions as shown by investors and players so far. How do you reckon the market week will end, on a positive or a negative?
Well, I think the market is going to close the week on a positive note, despite the reduced liquidity in the system. As the yields have gone up in both the treasury bills and the bond space. For the longest tenured bonds, we've seen bids and offers widen, coming from the sub 10% mark. So they're now around the 10.4 and 10.2 on the offer. So I'd say that the market will close on a positive note with demand, simply because of these attractive yields.